An Annuities Guide. Chapter 1. An Annuities Guide. Annuities Info. An annuity is money you pay up front to a company, and in exchange, when you get to a certain age, they pay you a certain amount of money every month, either for life or a certain block of time. It sounds weird, and it's a risk in case the company goes under. I can manage my own money without giving it to a third party to manage for a fee. Think of life insurance as something you buy to give your family money in case you die, and annuities as something you buy to give you extra money if you keep on living longer than expected. The concept is that you invest money into an annuity in exchange for a regular, monthly paycheck when you retire for a certain interval of time, usually for life. In my opinion, why give someone else money to disperse it back to you when you can invest it in other instruments yourself? Annuities are a sucker's bet, because the money you spend on an annuity probably won't be recovered fully with that paltry monthly payment for several years to life later on. You will do much better buying a bond like a government savings bond and getting several % interest on it per year. Annuities are solvent because all insurance companies are backed by the state insurance office, which will pay up if the insurance company goes bankrupt. The big advantage of annuities is that the tax is deferred until you withdraw the money. Annuities come in all shapes and sizes, but they each offer tax-deferred income for the future. Life insurance companies usually sell them. There are three main types: deferred fixed rate, deferred variable, immediate. It's advisable to buy an annuity only after you put money into your other retirement plans like the IRA, 401k, or the 403b. You can pay for the deferred annuities either with a lump sum payment or by paying a certain amount of deduction out of your paycheck. The deferred fixed annuity means that you receive a certain, guaranteed rate of interest on your investment, which may be updated after a certain interval of time. In this way, it's just like a certificate of deposit at a bank. The deferred variable annuity means that you get to invest the money in whatever vehicle you want, and the returns are dependent on those investments, on how well the mutual fund, stocks, or bonds do. Some variable annuities offer both a combination of fixed interest and a variable component, dependent on how well the investments do. The seller takes out a fee for managing the investment aspect of the annuity. The immediate or single premium annuity is when you pay a certain lump sum fee and the seller calculates a certain, set monthly payment for you for life or for an interval like 10 years. Some people buy them with the money they receive from a pension plan when they retire. The minimum investment is usually $5,000. Payments are usually calculated from mortality tables figuring on when they expect you to die. Since men live less longer than women, annuities may be a good deal if you're a man and expect to outlive the mortality statistics. There are several options on how to receive the payout from an annuity. A straight life annuity pays you a set income for as long as you live, no more, no less. Life annuity with period certain is a situation where you receive a set monthly payment for life, but if you die before the period certain expires, usually 10 or 20 years, your beneficiary gets regular payments until the period expires. Because of this feature, you will get a lower monthly payment than under a straight life annuity. Installment refund annuity is when you receive regular monthly payments until you die, and if you die before what you paid in is used up, your beneficiary receives regular installments until the total payments equal that amount. Joint and survivor annuity is an annuity which pays out to one or more designated persons until the last one dies. The big advantage to annuities is convenience and security in knowing that you will be receiving a monthly payment for life, plus the fact that the money you put aside is tax-free and your income tax on the interest is deferred until after you retire and start receiving the monthly payments. Unlike IRAs, you can put as much money as you want into them. When you retire, you can either receive the annuity in monthly payments guaranteed for life or take it in a lump sum. If you take the monthly payments, your tax payments on that income will be minimized by spreading it out over your remaining years, hence, you will end up paying less income tax on it. If you die, you can will the annuity to your heirs as a death benefit without the costs and delays of probate. The biggest downside to annuities is liquidity. Once you put the money into a deferred plan, you can't touch it without penalty until you're 59.5. Once you put your money into an immediate annuity, you can't get that lump sum back, only the smaller monthly payments. Another downside is added fees. The seller may charge an extra fee for starting one up for you, and there are substantial penalties for early withdrawals. You may be able to get a loan using your annuity as collateral. Most people have no idea what an annuity is, even though 40% of the banks are now selling them. You have to weigh out whether the insurance company's commissions and fees outweigh the benefits of the tax deferral gains from the annuity. The insurance ratings companies like AM Best and the others rate annuities and will offer this info for a fee. Go to insure.com for more info. Before you buy an annuity, run the company's name through an insurance rating service to see how strong they are, whether there's a good probability that they can pay you monthly for 20 years or so. Your rate of monthly income from the annuity ID determined by a formula called income per thousand. There are 4 major factors. 1. Amount of money you put in. 2. Your age. 3. Your medical history. 4. Current interest rates. They calculate how much they will pay you per month for every $1,000 you put up. Different companies come to different rates, so you could comparison shop. Call 3 or 4 insurance companies up, tell them you have X dollars to buy an annuity with for life, and ask what will your monthly return be. It's a gambling game. They have their life expectancy tables. If you die before you use up all the money you invested, they win. If you die long past the time they expected you to die, you win because you got a lot more money than you put in. In the end, to me it's very simple. Unless you plan to outlive them all, it's better to invest in something else, because you can bet that these companies are in business to make money and they don't intend you to end up getting more money than them out of the deal. You generally buy an annuity from an insurance company, but brokerage and discount brokerage firms sell them too. Check the company's annuity ratings through Moody's.com, WeissRatings.com, or StandardandPoors.com. Charitable annuity info. You donate a large chunk of money to a registered charity both out of the goodness of your heart and to avoid paying large taxes on it, especially if it's a capital gain. They pay you a monthly fee for life and possibly for the life of your spouse if that's the agreement you want. When you die, they keep what's left. This way you avoid taxes. In the end, you could come out with more money than if you kept it all and paid taxes on it. There is also a charitable annuity trust for wealthy people. Index annuity info. An index annuity tracks one of the many stock market indexes like the Nasdaq 100. Your rate of return is typically a set percentage of the increase in that index over a year up to a cap percentage rate. Suppose your index annuity says they'll give you 50% of the percentage rate increase of the Nasdaq 100 this year up to a percentage cap of 10%. If the Nasdaq 100 goes up 20% or more, the most you can gain is 10%. If the Nasdaq 100 goes up less than 20%, your gains are under 10%. Index annuities come with a guarantee of their values, so even if the market plummets, you still get the principal, what you invested, and a little extra back in the long run. Life plus 5 or Life plus 10 option. You buy an annuity with 2 possibilities. Money for life. Money for 5 years guaranteed. Money for life. Money for 10 years guaranteed. Let's say you pick the first option. If you die before the 5-year term is up, money is paid to your beneficiaries up to 5 years. Single premium immediate annuity. You give the insurance company money. They immediately start to pay you monthly payments for a set term or for life. Split annuity info. You buy an annuity. The insurance company divides the money into 2 accounts. With one, they pay you a monthly fee. With the other, they invest it in stocks and other investment vehicles and hope that it goes up to the original value you paid for the annuity in 5 years. Annuity buyout. Sell your annuity now. Get lump sum cash in exchange for your future annuity payments. jgwfunding.com. americasnotebuyer.com. structuredsettlementalliance.com. Chapter 2. Annuity websites and companies. Annuity resources. Annuity and life insurance shopper. 8 Talmadge Road, Monroe, New Jersey 08831. 800 800-872-6684. 800-617-3841. Annuitieshopper.com. Newsletter which rates different types of annuities. Morningstar Variable Annuity / Life Performance Report. 800-876-5005. 800-735-0700. Morningstar.com. Morningstar.net. Book about insurance policy and annuity costs. National Insurance Consumer Helpline. 1001 Pennsylvania Avenue, NW. Washington, D.C. 20004-2599. 800-942-4242. ACLI.com. Free booklet, A Consumer's Guide to Annuities. TiroPrice.com. 800-341-0790. Free Variable Annuity Analyzer Software. Annuity websites. AnnuityTruth.org. FixedAnnuityDirect.com. TotalReturnAnnuities.com. AnnuityBusiness.business2k.com. AnnuityLibrary.com. aa2.org/insurance/verenentai.html. Annuity.com. Annuity.net. AnnuityAdvantage.com. AnnuityFYI.com. AnnuityNet.com. AnnuityNetAdvisor.com. AnnuitiesHopper.com. 800-872-6684. AnnuityZone.com. 877-4 Client.AnnuityNetAdvisor.com. GroupWeb.com/oval/annuities.htm. ImmediateAnnuities.com. MetLife.com/lifeadvice/money/docs/annuitiesintro.html. NICE.org, National Association of Insurance Commissioners. RetireOnYourTerms.com. Annuity company websites. 1. Most life insurance companies sell annuities. AnnuityAdvantage.com. AnnuityFYI.com. BreakDirect.com. AnnuityNetAdvisor.com/decisions/annuityquote.asp. AnnuitiesHopper.com. DirectAnnuities.com. AccuQuote.com. 800-442-9899. ImmediateAnnuities.com. IndexAnnuityWorld.com. InsureAmericaAnnuity.com. InsuredAnnuityUSA.com. Keyport.com. Independent, 800-829-2887. MostChoice.com. PRUDENTIAL-LIFEINSURANCE.com. Schwab.com. QuickQuote.com. 800-867-2404. Quotesmith.com. 800-556-9393. TIAA-CREF.org. 800-223-1200. TotalReturnAnnuities.com. USINSURangkianline.com. Valak.com. TiroPrice.com. 800-638-5660. Vanguard.com. Websaver.com. Annuity company websites. 2. Aetna.com. 800-525-4225. Emeritus.com. 800-745-6665. EmeritusDirect.com. 800-552-3553. eAnnuity.com. 877-569-3789. Fidelity.com. 800-544-2442. 800-544-6000. Kemper.com. 800-778-1482. Keyport Life. 800-437-4466. Keyport.com. Schwab.com. 800-838-0650. Transamerica.com. 800-238-1970. TiroPrice.com. 800-469-6587. USAA.com. 800-531-8000, 800-531-4440, 800-531-6390, Vanguard.com, 800-522-5555, 800-523-9954, Waterhouse Variable Annuity, 800-622-3699, Waterhouse.com, Zurich Kemper, 800-621-5001, ZurichDirect.com.